All right, folks, buckle up because we're diving headfirst into Tesla's latest quarterly report. This thing's a beast. Hundreds of pages, enough numbers to make your head spin, but you know us, we love a challenge.
And this report, it's a juicy one. We're talking about the quarter that ended in June, and let me tell you, there's a lot to unpack here.
Yeah, like for starters, did you see how many cars Tesla's cranking out? 844,000 vehicles in just 3 months. It's mind-boggling.
It is, isn't it? Especially when you consider they just started production on the Cybertruck down in Texas at that massive gigafactory of theirs. Remember all those pre-orders from what feels like ages ago? Well, they're finally rolling off the production line.
It's about time. Although they did deliver a tad fewer cars than they built this quarter. Something like 831,000. Still a ton, but any idea why the discrepancy?
Well, it's definitely something to keep an eye on, especially with so many other car companies jumping on the EV bandwagon these days. Could be a few things, maybe a hiccup in their supply chain, or perhaps demand's not quite as insatiable as it was.
Intriguing. Okay, so let's talk money. Tesla raked in a cool $25.5 billion in revenue this quarter. Now, that's a big old pile of cash, even for a company like Tesla.
It is a hefty sum for sure, but here's the thing. It's actually a bit of a dip compared to the same time last year. That might sound alarming, but it's not necessarily a bad sign. Remember, Tesla's been making a big push to make their cars more affordable, cutting prices, offering sweet financing deals, all part of a long-term strategy, you see.
Ah, so they're playing the long game, eh? Taking a bit of a hit now to dominate the market later. Clever. What about their net income? What's the story there?
It's a similar story, actually. Net income came in at $1.48 billion for the quarter. Again, a bit lower than last year, but not a reason to panic. Tesla's making big moves, investing heavily in growth.
Oh, you mean like that super secret next generation vehicle platform everyone's whispering about? Or how about that massive new mega factory they're building in Shanghai? Talk about going big or going home.
Exactly. They're not just thinking about building more cars, they're thinking about how to power the entire world with those giant megapack batteries. Tesla's playing chess while everyone else is stuck on checkers. But the million-dollar question is, will it be enough to stay ahead in the electric vehicle game? The competition is fierce.
It's like the Wild West out there, but with fancier cars. So we've got a snapshot of how Tesla's doing right now, but what I really want to know is what's their strategy? What are they doing to stay ahead of the pack? All right, so we've seen Tesla's report card, and they're getting A's for ambition, that's for sure. But what's the game plan here? What's Tesla doing to make sure they stay ahead of the curve?
Well, they're definitely not resting on their laurels, that's for sure. This report makes it clear that Tesla knows the competition is heating up.
And how? Seems like every other day there's a new electric car hitting the market.
Right, it's a whole new ballgame. So Tesla's responding with a multi-pronged approach. First off, they're doubling down on affordability. Remember, we talked about those low revenue numbers. Part of that is intentional.
Yeah, the whole making Teslas more attainable for the masses thing.
Right. Exactly. Price cuts, attractive financing, they're making a play for the everyday driver. But, and this is key, they're doing it while also trying to maintain their profit margins. It's a delicate balancing act.
Yeah, got to keep the lights on, right? Yeah. So how do they walk that tightrope? Lower prices usually mean lower profits, don't they?
That's where their obsession with vertical integration comes in. They're masters at controlling their supply chain.
Right, vertical integration, that was the remind me again how that works. It's one of those businessy things I always forget.
Imagine instead of buying a car part from another company, you just decided to make it yourself. That's essentially what Tesla's doing.
Oh yeah, they like to do things their own way.
They're mining the raw materials for their batteries, refining lithium, even getting into the chip-making game. By controlling more of the process, they're less reliant on other companies, which means less vulnerability to price hikes and supply chain disruptions.
So they're like the ultimate control freaks, but in a good way.
Exactly. It's all about reducing their costs and having more control over their destiny.
Makes sense. So they're working on making their cars more accessible, they're streamlining production. What else is in their bag of tricks?
Well, they're also leveraging one of their biggest assets, the Supercharger network.
Ah, yes, those Tesla-only charging stations. Like having VIP access to the best electric pump in town.
And here's where it gets really interesting. Remember how we talked about all the other car companies going electric? Well, a lot of them are actually adopting Tesla's charging standard, NACS.
Wow, really? So even non-Tesla drivers might be plugging into the Supercharger network soon.
That's the idea. It's a brilliant strategic move. Tesla's essentially creating the industry standard for EV charging, which gives them a massive advantage in the long run.
So they're playing 3D chess. while everyone else is still figuring out checkers. But even with all this strategizing, this report hints at some potential roadblocks ahead. Okay, so Tesla's playing 3D chess, building their own electric empire, but even empires have their weaknesses, right? What kind of cracks are showing in Tesla's facade?
Well, remember that data breach they had a while back? Turns out it's coming back to bite them.
Oh yeah, that wasn't great. Employees' personal info ending up on the dark web, not exactly a PR win.
Yeah, and this report mentions a slew of class action lawsuits popping up because of it. Those things can get pricey.
Yeah, lawsuits are never fun, especially when you're a big company like Tesla.
Speaking of big companies and headaches, did you catch the part about Elon Musk and X Corp?
You mean the whole Twitter saga? Yeah, I thought that. Something about lawsuits in Delaware.
Right, involving some potential overlap between Musk's dealings with Tesla and his adventures with X Corp.
Sounds messy. Like Tesla needs more drama on top of everything else.
It definitely adds another layer of intrigue, that's for sure. Oh, and speaking of layers, did you notice the little tidbit about Tesla officially becoming a Texas company?
Wait, really? Did they already move their headquarters there?
Yeah, but this report makes it official, legally binding. They're Texans now, for better or worse.
From Silicon Valley to the Lone Star State. Well, that's Tesla for you, always full of surprises. But after all this, the big question is, can they really stay on top?
It's a tough call. They've definitely got the vision, the tech, the ambition.
And let's not forget the sheer audacity.
Absolutely. But they've also got their fair share of challenges.
It's like they're building a rocket ship while simultaneously flying it through an asteroid field, blindfolded.
That's a pretty accurate analogy. Only time will tell if they can pull it off.
Well, that's all the time we have for today's deep dive into the wild world of Tesla. It's been a wild ride, and we're just along for it.
Buckle up, because it's only going to get more interesting from here.
That's for sure. What do you think is next for Tesla? Will they conquer the world, or will it all come crashing down? Head over to our website and let us know your predictions. Until next time, stay curious, and we'll catch you on our next deep dive.